Hi, I'm Roger Conrad. I'm co-editor of MLP Profits. One question my co-editor and I, Elliot Gu, have been receiving quite a bit in the last few weeks is what's going on with the MLPs? Why have they been falling? Obviously, we had a huge run-up at the end of last year and even into January, and that began to fizzle out mid-January. And then here in February, things have trailed off a little bit. Some people have worried that maybe something's changed with the MLPs. Has Obama enacted something in his budget that would reduce their tax advantages? Is something up with the economy that could really hurt them? Have they overextended themselves? Well, we've done quite a bit of research, and we focus on the businesses themselves, not so much the stock market hype. And what I can tell you is that all the holdings that we have are in no danger of any kind of tax changes. There's nothing like that in the Obama budget. In fact, there's a tremendous amount of support for extending MLP treatment to other areas of energy, such as transmission grids, such as renewable energy, such as ethanol, all these areas that the administration supports. So there's no hurry to go that way. There is a movement afoot to begin changing the tax status of MLPs that use carried interest. But again, we've warned you against these things like AllianceBernstein. We have sells on all these MLPs, so be sure you don't have these in your portfolio. They're the only things out there right now that are vulnerable to a potential tax change. You just don't want to be owning them. But the companies we have, certainly in no danger. The other thing is underlying fundamentals of these companies are very strong. You know, as we pointed out in MLP, every time a company issues or an MLP issues equity, issues more units, share price tends to fall. In some cases, and in fact, over the past couple of weeks or so, some of those drops have been fairly dramatic. Investors, the catalyst being, dilution, fear of dilution, but then selling tends to beget more selling. And I think it's a sign that a lot of the people that own these things, and I'm not pointing the finger at individuals either, I'm talking about institutions which own these things, don't really know that much about them. They're buying MLPs because they like the concept or they like the yield. But they're not a whole lot, maybe not a whole lot of interest in what's actually going on or in the kind of whether it can generate a dividend growth. So you've seen selling feed on selling, and you've seen some fairly dramatic drop-offs. Now, most of these things have come right back up in the subsequent days following that. But this has also been another, and probably the major reason that these things have sold off. We're very positive on these equity issuances for one reason. One, they're issuing these units, they're selling these units at a good price, the best price that these MLPs have fetched for some time. And by the fact of being able to issue them at good prices, that means a low cost of capital. That means that companies and these MLPs can go into new projects, they can make acquisitions, they can do construction with fairly low cost capital at their disposal. Now, what this means is more projects become economic. They can pick and choose among them. As they grow a new project, as they bring a new asset online, as they make a new acquisition, it adds to cash flow immediately. They're very accretive. What happens when cash flow goes up? Well, distributions tend to go up. So while people have been worrying about the dilution from these things, they're actually, or these acquisitions and these equity issuances, they're actually very, very bullish in terms of generating more distributable cash flow and therefore higher distributions. And in fact, if you look at our MLPs, they haven't missed a beat in terms of increasing distributions. They continue to do that, and being able to issue low-cost capital is very positive. Now, one thing last year that several readers were questioning us about was the fact that here they were looking at these MLPs and they were trading well above our buy targets. Well, the silver lining here, or the lemonade out of the lemons here of these MLPs falling back, is that they're now at prices that are below our buy targets again. So if you've been looking for an opportunity to buy into some of these MLPs, if you weren't able to get in the first time around when they were below our buy targets, again, this is a good opportunity to buy. A lot of people tend to fear buying after a sell-off, and that's one habit we'd like to get you out of. I mean, we're in these things, again, good businesses. We want to hold them for a long period of time because that's how we're going to really build wealth with these things. That's how we're going to generate great higher dividends and higher share prices as those distributions are added to. We want to buy them at the lowest possible prices, obviously. And when those prices occur, that's when we want to strike. We won't hang around if an underlying business is cracked. We won't hang around if it looks like a tax situation is going to change. Like I said, that's not the case with the energy MLPs. It is the case with the carried interest financial construct MLPs. But as far as ours are concerned, low prices are a time to buy. So please check out our articles, check out our portfolio. We think we've got some good stuff out there. Whether you own it and you want to stick and you need to stick with it, or if you're looking for new things to buy. Thanks for tuning in. I'll look forward to chatting with you next time.